Spandana Sphoorty, that particular stock is in focus. Shalabh Saxena, MD and CEO, is joining us after a blockbuster set of numbers. The stock is witnessing some profit taking, but the numbers are very good, clearly. Shalabh, congratulations on a good quarter this time around as well, and brokerages are upgrading the price target to almost 1200 now. I want to understand, the street is viewing that the kind of run rate which you have demonstrated this quarter, you are on set for almost a 30% CAGR over the AUM for the next 2 to 3 years. Do you think that's a fair estimate of the street?
Yeah, so I'll just moderate. First of all, good afternoon, Ajay. I would moderate the 30 to or 25 to 30. I think, that's a reasonable number to kind of target so that you are not really going overboard, basis what you would have committed. We will end this year, Ajay, at about 12,000 crores, rough and ready. Next year, we are planning to move from 12,000 to 15,000, which is a 25%. So I think a more reasonable number, a calibrated number is 25 to 30. And I think, given the economy and the way it is, the whole framework is kind of shaping up from a business cycle point of view. I think, we are in good shape.
Your ROAs, could that be coupled with almost 5% kind of ROAs as well, or would you like to moderate that number too?
Yeah, so all along, Ajay, we've been guiding a number of 4.5 and above, all along over the past 6 quarters that we've been meeting and, sort of interacting with all the stakeholders. What we've said is are two things actually. One is a steady state growth of about 25%. Number two, a credit cost of south of 2%, max it should touch is a 2% on the portfolio. And the third is to the point that you mentioned, ROAs of 4.5 and above. I kind of agree that, we have for the past 2-3 quarters, we've been delivering a 5.7, 5.9. But that's more a factor of, how things have shaped up. But comfortable as an enterprise to deliver a 4.5 and above.
Sure. Hi, this is Anisha also joining in the conversation. Well, recently we have, heard about a lot of these reports coming in that RBI seems to be a bit worried about the unsecured lending and the asset quality as a whole in terms of the lower ticket strata. What's your view on the same? Of course, your asset quality has been quite pristine at around 1.4% in terms of GNPA. But on the incremental book, are you getting a lot more cautious?
No, so, Anisha, what is very, very critical in microfinance is you have to have a calibrated strategy. Just because there is an opportunity, it does not mean you really grab it with both hands. You have to be very, very careful in walking the path. And hence the plan that you have, which is say 25 to 30 is what I have said. You have to really walk towards it and approach it in a very matured fashion. To your question on credit quality, we obviously are, as an enterprise, we are conservative in terms of acquiring customers. And hence we as a philosophy believe that we will lend short, as in shorter tenures. We'll be muted on ticket sizes, which is very, very critical. And we are our tenures, when I say tenures, so the tenure, I mean, when we joined, or rather when the new management took over the company, at that point in time, the portfolio was 100% 24 months. It has now come down to 83%, so that's what I meant in terms of this thing. And the third most important thing that we are cognizant of is the geographical concentration. We are very, very mindful of the fact that, you should not be concentrated in any geography, no matter how good the quality it is delivering today. So, so these are the three things which are the fundamental blocks of our business, which we are progressing on. And we are kind of ensuring that there's a balance. We balance the growth with all these three blocks in place.
Sure, and I think you're also transitioning into, or at least increasing your weekly collection model as well. Could you talk to me about what would be the impact on, of course, collections and also on the cost side? Because this would be a bit more expensive, I'm guessing.
Yeah, so, having run a balance sheet of maybe 2.5 size of what we are currently, there is enough evidence to show that, the weekly versus a weekly does not lead to a higher cost, that I can say this with absolute surety, number one. Number two, I can give you enough data to prove that a weekly model in times of whenever there are disruptions in a specific geography is the first model to kind of come out of a crisis. So there are various bureau reports available where, in times of a crisis, a weekly model always stands tall compared to the fortnightly and the monthly. The third, we are a bit biased because, having experienced all of this, we are very clear in our heads that joint liability, which is the core of the microfinance model that we follow, works very well on a weekly because the liability installment, or rather the installments are smaller vis-a-vis a monthly. So a weekly stand good in a good stead as far as the enterprise is concerned. So to answer your question, we are pretty clear that, and pretty sure also that in a steady state on the weekly model, cost to income of anywhere between 35, 36 to 38, 39% is what we will deliver. In the last quarter, you would have seen we are in the neighborhood of about 41.5. Once we kind of, this is obviously because we've invested a lot in new branches, new people, but in a steady state, I think, anywhere a number between 35 to 38, 39 is what we can steadily deliver for the next at least 4 to 6 quarters.
Okay, like that clarity of thought. But just before I let you go, talk to me about the shareholding pattern as well. And I'm sure this is the question you get very often. Kedara owns around 48%. And then, of course, there's the balance stake of Ms. Padmaja Ganga Reddy as well. Any conversations?
No, so, so let me put the maths right. 48% is Kedara. Padmaja, the name, Padmaja is about 12% or thereabouts. And then there are other shareholders as well. So to your question in terms of, what are the talks, the board currently is fully behind us in terms of delivering the plans. We came out with a Vision 25 document about a year and a half back, where we had articulated that exit FY25, which is next year, we should deliver a portfolio or a AUM of about 17,000 crores. In fact, we have started planning for 25 to 28, which is the next 3 years of cycle post the exit of next year. So to my mind, we are going strong. The strength is reflected in the various positive comments that we get from the stakeholders and the other, which includes the shareholders. I guess, we'll continue on that path. But some change of hands here and there, I mean, at least not that I'm aware about, but it doesn't really disturb the larger picture as long as you're clear on what is the path you're going to walk as an institution and what are the goods that what are the results that you're going to deliver end of every quarter or every year.
Sure, completely agree. Point taken. Thanks so much for making time and speaking with us. So that's the management of Spandana Sphoorty, quite convincingly talking about the growth that they have envisioned for themselves.